From tech to energy,
Sure.
since Jenny, you have considerable exposure in energy, Kinder Morgan, Chevron, Duke Energy, ONEOK, PPL Corp. And that's the part of Marco's note that you said at the very top of the program that you agree with most of all. Energy is the best performing sector year to date. I get that it's a small percent of the S&P 500, and I'm not sure how widely owned a lot of these names are. But why do you think we should stay with these names?
So you can say it's the best performing year to date, and that's great. But to have a real perspective, you need to look back like 5 and 10 years. And energy has done the energy stocks have done nothing over 5 and 10 years, which leaves them in the position today of having great free cash flow, great dividend yields on many, super low PEs. They have been totally ignored for the past 5 years. And so even though they're up a lot today, they still have really, really low valuations. There was an interesting FT article this morning, and the title is Hedge Funds Cash In as Green Investors Dump Energy Stocks. And what it says is that over the past 9 months, 10 months, a lot of hedge funds have seen the same thing that I've seen, which is like, whoa, you know, there's been a whole emotional trade on these because people want to think that we're in position right now to have all renewables and green energy supporting our life and driving us to work every day. But that's not the case. So they've sold off the fossil fuel companies, build them as evil, build them as terrible. The reality is we're super reliant on the products that they produce. And that's kind of what we're seeing in Kolonovic's report is him saying, like, look, oil could go to 130. That's because there's huge demand. So I think there's a long runway still where we can make money. And even though they're up a lot, they're still really cheap year to date. So I think there's a lot more that we can get out of them. Actually, Scott, earlier in the year, I was saying it would be easy to make money in energy this year. And I think you thought I was joking, but I wasn't. And I would still say it should still be pretty easy to make money in energy for some time to come.
Okay. Touche. You win. Give me that. Sarat, Chevron, and EOG.
Yes. So I agree with Jenny on this, and I think what, we dipped our toe where market weight energy because we thought it was cheap, but we also know in the last 5 years we got killed by having exposure in there. The key in energy is having really good, solid, diversified balance sheets, because you can get the $130 oil, but you also can go back to 40. And we've seen what happens then in the oil patch at that point, because there is really nobody going to be lending to you unless you're getting it at ridiculous rates. And Jenny's absolutely right. I mean, investors have moved away from this sector, whether it's because of ESG, it's because endowments and foundations said we don't want exposure. So capital that is coming in there is capital that is expensive and it's hard to get. So you really want to be with a Chevron that's raising its dividend, or a Royal Dutch or EOG. Those are, and even Pioneer. Those are the companies we like. And they're going to make a lot of money in this period, but then when oil does come at a revert, they have to make sure that they can still have break-even price.